All right, we're going to talk about issuing and trading securities in the primary and secondary markets. First, we need to talk about what the primary securities market is. This is the newly issued securities are traded. So the firms that issue securities to raise that additional capital, this is where they do that, in the primary securities market. And then the secondary securities market is just taking those previously issued securities and trading them. So for a second time. Primary would be when it's first issued. It's new. So what will happen is a company will have a public offering, which is where the securities are going to be offered to any investors who are willing and able to purchase them. The initial public offering is the first time a company issues stock that may be bought by the general public. And you'll see a lot of companies that end up going, or corporations that grow and they want to raise more financial capital, so they go public by issuing stock and then offering that stock to investors. Now, sometimes an investment banker will buy all those shares of the public offering. So the company gets the capital funds from one place, from the investment banker, and the investment banker can turn around and sell these shares at a higher price and make a profit. Registration statement is a long, complex document that firms must file with the SEC. Remember, we talked about this Securities Exchange Commission, and they must file this when they sell securities through a public offering. Before we move on, I want to talk about the investment bank. When firms go public, they usually have to get the help from an investment bank, because investment banks specialize in helping firms issue these new securities. So the investment bank can assist in planning and market assessment phase. And often they can underwrite the stock issue, and like I said, in this way they earn a profit when they resell the stock to investors at a higher price. Instead of doing a public offering, companies can have what's called private placements. And this is a primary market issue that's going to be negotiated between the issuing corporation and a small group of accredited investors. And private placements are usually simpler and less expensive than public offerings. And the reason it is because privately placed securities, they are exempt from the requirements to register with the SEC. But because of the pool of potential investors is limited to just accredited investors, private placements, they don't have the potential to raise as much money as public offerings. So what is an accredited investor? It's an organization or individual investor who meets certain criteria established by the SEC, and so qualifies to invest in unregistered securities. So these are established by the Securities Exchange Commission. All right, well, let's talk about secondary securities markets. So we talked about primary, and remember, secondary securities markets is where we are trading previously issued shares. All right, so we have stock exchange or securities exchange, and this is an organized venue for trading stocks and other securities that meet its lending requirements. In your textbook, it talks about the New York Stock Exchange. It runs 10 exchanges across North America, Europe, and Asia, and it trades stock in 2,300 companies worth $26 trillion, making it the world's largest stock exchange. And then you have NASDAQ, which is the second largest stock exchange. So, the stocks of many of today's high profile technology companies are traded on NASDAQ: Amazon, Apple, Google, Microsoft, and Tesla. Then you have over the counter market, and this is the market where securities that are not listed on exchanges are traded. Electronic Communications Network. This is an automated computerized security trading system, and it automatically matches buyers and sellers and then executes trades quickly and allows trading when security exchanges are closed. In order to trade on this network, you have to open an account with a broker or a dealer that subscribes to an electronic communications network.